Welcome back to U.S. Farm Report this weekend. Chip Nellinger and Matt Bennett joining us for our marketing roundtables. Okay, there's a lot of news happening right now. I mean, we're looking at what's going to happen with Trump on trade. We're looking at a strengthening U.S. dollar. We're talking about better weather in Brazil and the impact it's having on the crop there. But Chip, I want to start with you. What do you think the market is watching at this point?
Well, I think two things mainly. Number one is basis improvement. We've got a lot of upfront demand on corn and beans, both really good demand. But then as you look forward, we get to about January, February, especially on bean demand, it falls off the cliff. Brazil becomes much cheaper. And right now, there is no threat in the forecast as far as Brazilian production goes. And it looks like they're on track as of today for a 6+ billion bushel bean crop. So that's kind of the fight I see is near term, really good demand, strong basis, longer term, potential massive Brazilian bean crop. And that push and pull is really what's kind of affecting the market right now.
Yeah, Matt, Chip mentioned that demand. I had a farmer text me last Friday and he goes, what the heck is going on with corn demand right now? Basis is phenomenal. The buyer just called me and said, give me as much old crop as you can. He sold out of old crop. So what is going on with basis right now and how should farmers be taking advantage of that?
Yeah, I mean, there's no doubt that whenever you get the bin door closed, a lot of times the farmer really doesn't want to step in and sell much there. Of course, a lot of folks that have it in commercial storage are locked in either till Dec 1 or Jan 1. And if it's Jan 1, I mean, good luck getting them to, move on that because they've got a minimum amount that they paid in for storage. And so there's no question that this basis is really caught fire. I mean, what you got to look at as a grower is, as far as futures are concerned, you're 45 cents off the lows, or we've been trading in that neighborhood. Yeah, that was back in August. But whenever we look at the move in futures, yes, maybe it's not exactly what the grower wants, but when you add to that basis appreciation, which for some folks has been anywhere from 20 to 40 cents, your flat cash price is significantly better than what we've seen previously. So yes, strong demand. Export sales have been pretty good. Shipments have actually been pretty decent for this time of year. And then ethanol corn grind has just been really out of this world the last couple 3 weeks. And so demand's been quite strong. And that's one thing that's really driving this basis.
Yep. Chip, let's talk about wheat for a second. Because as we talked about in news, there has been a war premium back into the market. I mean, the fact that we're even talking right now about a nuclear war, and outside of that, are we going to see wheat prices shift much based on what's happening between Russia and Ukraine? Just crazy that we're still talking about this more than 1,000 days into this situation. But you look here in the U.S. too, we've had some nice moisture in winter wheat country as well. So what is your outlook on wheat?
Yeah, wheat has been an easy sell for the funds, and on any rally that you've seen in the wheat market for going on 3 years, it has paid greatly to sell that rally. And I think the uncertainty of these next 2 months, 2.5 months, until the new administration comes into office, with the escalation in between Russia and Ukraine, barring the worst case scenario, and that being a nuclear strike. And I really don't think that is in the cards. Let's hope it's not anyway. That I think this is just some normal short covering. The funds don't like that type of uncertainty. I think they're getting out of some shorts. Maybe that can lift us a little bit into month end and maybe year end. But there's no shortage of the newly harvested crop in the southern hemisphere. And you mentioned we got pretty good rain in a lot of dry areas that's going to help that wheat in the United States go into dormancy in pretty good shape. And so I think right now you have to kind of assume that it's still a bounce to sell. Could there be a little more upside? Yes, as the funds get out of some shorts, but we've got no shortage of supply right now, it appears, in the world.
Okay, Matt, then looking at corn, wheat, and soybeans. Out of those three, which do you think has the best potential to see at least price improvement over the next 6 months?
I mean, I'd have to say corn. I'm not outright bullish. I think some of the things that we would all talk about on soybeans might hold us back somewhat. And you're talking huge stocks worldwide, U.S. But whenever you look at corn, yes, demand has been fantastic. Yes, some of this was front loaded, but at the same time, we've seen some folks in here buying corn that don't typically do so. Again, ethanol margins are not fantastic right now, but grind has been excellent due to pretty darn good hedging from that sector. Here's the thing: if exports and ethanol come in like they might, you might be looking at chiseling this 195 carry down to something south of 1.8, and who knows? Maybe the yield gets adjusted again. But if I was going to be guessing out of those three, I've got way more reasons to think that the corn market would rally than what the other two would.
All right, a lot of talk about the cattle on feed report on Friday, but what is the outlook for cattle prices? We're going to ask both Matt and Chip that when we come back.
Watch Markets Now with Michelle Rourke on the Farm Journal YouTube channel, keeping you updated throughout the day on the markets at the open, midday, and close. Find out what moved the markets today and what to expect the market to do next.